everyone. It's good to see you. For episode 141, Capital Deployment, I will be joined by an unusual, or not unusual, but a surprise guest, Pat McLean, our BDR, and I'm very excited. Pat, it's good to have you.
Yeah, awesome to be down here in the studio doing the podcast with you.
So we're going to, if you don't mind, Pat, we're just going to get right into it with job changes.
Let's do it.
So Chad Spooner transitioned to Medtronic Corporation from BIC Corporation, where he also served as Chief Financial Officer. As CFO, during his tenure at Medtronic, he brings a strong record of financial leadership and strategic oversight to the organization. Based in Stanford, Chad serves as a generalist within the company, guiding financial operations and supporting Medtronic's broader corporate objectives. He holds an undergraduate degree from the Massachusetts Institute of Technology, or colloquially known as MIT, reflecting a solid foundation in analytical and quantitative disciplines that underpin his leadership in finance. Edward Swenson transitioned to RFG Advisory to serve as president, bringing extensive leadership across the financial services industry. In his role, he leads the firm's portfolio management and strategic initiatives, applying a generalist perspective to bolster RFG's advisory capabilities and client solutions. Before joining RFG Advisory, Edward served as Executive Vice President and President of RIA Solutions at Ozag, and previously as co-founder and Chief Operating Officer of Dynasty Financial Partners. He holds a postgraduate degree from the NYU Stern School of Business, underscoring and highlighting his expertise in investment management and strategic leadership. Naveen Chopra transitioned to Roblox Corporation 401k plan from Paramount, and wow, that is a mouthful, where he served as Chief Financial Officer and played a pivotal role in shaping the company's financial strategy and operations. At Roblox, he oversees all aspects of financial management, including treasury, tax, accounting, investor relations, information security, real estate, and global corporate development and strategy. So he's clearly very busy. Based in Stanford, Naveen operates as a generalist, bringing broad expertise to his leadership of the organization's financial functions. He holds an undergraduate degree from Stanford University, so a little confusing with Stanford, Connecticut, and Stanford University, offering a strong and robust foundation for a strategic and analytical approach to corporate finance. And I think that's really interesting here, like kind of taking a strategic and analytical approach, because obviously finance is numbers, but I think it's really interpersonal. And as a BDR, I think you've probably deal with the interpersonal aspect with regularity. And I mean, just kind of hearing your thoughts like on really kind of this data-driven, pragmatic, and technocratic approach to corporate finance.
Yeah, definitely. I mean, strategy is twofold here. You have guys that are extremely data-driven. You have guys that are extremely interpersonal. And it looks like there's a push to get this like hybrid of both in there, working every day at those interpersonal relationships while also objectively looking at the data and understanding what do we need to do and then how do we need to foster those relationships.
Now we're going to talk about RIAs and about family offices. So 3 former Commonwealth financial advisors launched Schlegel Dunn as an independent RIA in Plano, Texas. And Plano, Texas is right outside Dallas, Texas. And I mean, it's really just an area that's seeing just tremendous, explosive growth, candidly. And I think, that makes sense that there's going to be a huge concentration of RIAs that are trying to really capitalize on and, no pun intended, monetize these amazing opportunities here. There's just a lot of capital there. There's a lot of wealth. The firm is led by Stephen T. Schlegel as CEO, with Scott J. Schlegel serving as CFO, and Brent J. Dunn as Chief Compliance Officer. And Northwestern Mutual Investment Management veterans Rep. H. Lambert II and Roger E. Crook Jr. registered LCW services. They're doing business as Altura Wealth Advisors, as an independent RIA in Virginia Beach, Virginia. Have you ever been to Virginia Beach, by the way?
I have a couple times. Most recently this past summer on a vacation. Nice. We went there as a lacrosse team in college as well. It's a sweet spot. Yes. They have a nice setup down there, I'm sure.
The duo is currently affiliated with Persh Kaplan Sterling Investments. The firm has engaged Charles Schwab as its custodian. And obviously it's newly, minted and clearly right off to a prosperous, amazing start. Now, Opera Group, a privately held company of fiduciary, corporate, and fund administration businesses, acquired UK-based Acuro. which manages the wealth of families, entrepreneurs, and family businesses, overseeing $24.5 billion in assets. I mean, really just a vast amount of wealth right there. Deal terms were not disclosed as of yet. Opera is majority backed by Pula, the family office of British billionaire Stephen Lansdowne. And so we've talked about that. Pat, tell us about what's going on in the consultants, searches, and investments world, because there's a lot going on, and we'd love to hear about kind of key trends.
Yeah, absolutely. I mean, let's get into investments first of all. We have 3 employee retirement systems to talk about, starting off with the employee retirement system of Texas. They've reportedly made $175 million in commitments across infrastructure and real estate, comprising to $75 million to I Squared Capital's Growth Markets Infrastructure Fund 2, $40 million to KKR Asia Pacific Infrastructure Investors 3, $35 million to Actis Energy 6, and $25 million to One SFERS Preem 3 Fund. Next up, we have San Francisco Employees Retirement System. They outlined their commitment pacing plans, including $550 million for real assets and $1.1 billion for private equity. The pension is targeting a 10% allocation for real assets split into 70% real estate, 20% infrastructure, 10% natural resources, and 20% allocation for the private equity umbrella, of which half will consist of buyouts, with the remaining half split evenly between venture capital and growth equity. So that's a pretty stacked pacing plan there, if I don't say so myself.
Indubitably.
Yeah, definitely. So finally, we have the New York State Common Retirement Fund. They have reported commitments they made in July totaling $845.7 million, including $400 million to RFM NYSCRF Affordable Housing Fund, $250 million to KKR Empire PE Co-Investments, $110 million to Fraser Life Sciences 7, $40 million to PVP Fund 5, $30 million to Primary Select Fund 4, and $15.72 million to Wavecrest Growth Partners. The allocations were made as part of pensions, private equity, real estate, and emerging manager programs.
Okay.
Jumping into searches, we have the Town of Lexington Retirement System. They opened a search for experienced global equity manager to oversee approximately 25 to 30 million, replacing an expiring strategy. The pension will accept responses until October 31st at 12 p.m. Eastern Time, with Makita assisting in the search process. Then we have the Connecticut Retirement Plans and Trust Funds. Institutional and private wealth consultant Fiducian Advisors has hired Olivia Wall as a senior research analyst for private markets. Wall joins from Connecticut Retirement Plans and Trust Funds, where she served for over 6 years, most recently as a senior investment officer in real assets, including real estate and infrastructure. Wall holds the CFA designation and began her career in 2011 as an analyst in the insurance portfolio analytics group at BlackRock. So big come up from those days at BlackRock, it seems.
Without a doubt, clearly.
Yeah. Finally, the Plymouth County Retirement Association. They're reviewing candidates for a diversifying hedge fund manager, which received 40 qualified responses since its launch in June. The $1.65 billion pension has a 3% target allocation to hedge funds, which currently holds a 3.6% allocation weight within the portfolio, or approximately $59.6 million. Makita, which is assisting in the search as well here, said Stanley Capital was disqualified for not meeting search criteria. So what does this all mean? What are Dakota's strategic takeaways here, Peter?
Well, I mean, Pat, there's definitely a lot to digest. I think what's really stuck out right here and what's abundantly clear is, I mean, there was just a huge push for infrastructure, private credit, and I think right now, especially with infrastructure, I mean, a lot of state, local areas, infrastructure is aging. It's crumbling. And I mean, a lot of infrastructure in the U.S. is actually characterized and classified as structurally deficient. So it's really this push to inject more private capital to really revitalize flailing infrastructure. And I think pension funds are aware of it on the LP side. I think private equity firms on the GP side are really acutely aware of that. So I think there's a huge push. And also there's a push from infrastructure at like multiple fronts. I mean, right now, the reshoring, there's a huge push to reinvigorate manufacturing in this country. So there's a lot of infrastructure on that front. There's what we're seeing with the artificial intelligence boom. There is a gold rush among us. And I think we're seeing that with the data centers. I mean, every single day, I feel like there's a data center. Mm-hmm. So, I mean, there's just an insatiable appetite for robust infrastructure investment. And clearly, private capital is not a supplement, it is an additive that is incredibly vital. And so, to really top that off, so number one, firstly, institutional capital is targeting real assets and private credit. From Texas to San Francisco, where we're seeing major pensions are signaling strong demand for infrastructure, real estate, and private credit strategies. This reflects a sustained focus on inflation-resistant and yield-oriented investments, a trend GPs can leverage by positioning differentiated strategies in these asset classes. And as you know, I mean, inflation it still remains a little elevated too. So I think, and especially in the past 5 years, inflation has been incredibly high. Especially summer 2022 when it reached record highs. I think there's a huge push to really find something that does a hedge against inflation. And then secondly, smaller and mid-sized plans are increasing their manager rotation. Active searches from Lexington, Plymouth County, and Connecticut, they underscore that mid-tier systems are rebalancing and diversifying mandates. And I think that's one thing that, I think when you really read about what a pension fund's allocating or how these retirement associations are allocating, they have to obey a mandate. And it's really interesting because that really how that interplays with macro trends can be interesting. It can be confusing. So definitely to keep that in mind is absolutely pivotal. And LPs are increasingly open to new relationships, creating entry points for emerging and boutique managers with clear value propositions. Since right now it's all about generating alpha. And fundraising momentum, it is concentrated among experienced managers. People here, they want expertise, they want experience. So Stonepeak, RCP Advisors, and Incus Capital are demonstrative of the fact that investors are rewarding proven track records and sector specialization. And I think one thing is finding a niche, finding something that's topical, relevant, and also very niche. And I think that's really present here for LPs. It's indicative of continued confidence in seasoned operators. People want seasoned veterans that know how to navigate our ever-changing capital markets. For GPs, it highlights and underscores the importance of differentiation, operational credibility, and transparent communication during capital formation. But, I've said a lot here, and, before we get to the bottom line of this, what are your thoughts?
Yeah, I mean, I think it's very interesting to see right now both sides of the spectrum. So like you said, obviously experienced niche GPs are being rewarded for their expertise. At the same time, we're also seeing a little bit of risk where people are willing to dip their toes into those boutique GPs, emerging managers, a little bit more heavily. And so it's just interesting to see how things are shaking out. Everybody's trying to get in, and you just have both sides of the spectrum there, and it's definitely fun to watch.
No, I totally agree. And really to piggyback on that is I think the bottom line for me is institutional investors are, continually reinforcing allocations to real assets, private equity, secondaries, and credit. And I think it makes one thing abundantly clear is that despite macro uncertainty with elevated inflation, capital deployment is accelerating in areas with stable long-term return potential. GPs with, specialized expertise and disciplined fundraising strategies are uniquely positioned to capture this momentum and realize tremendous gains heading into 2026. And now with fundraising updates, I'd love to have you end us off here.
Yeah, let's get into it. So for fundraising updates, starting off, we have Stonepeak Infrastructure Partners. They've so far raised $1 billion for its second Asia-focused infrastructure fund, according to media reports. Stonepeak Asia Infrastructure Fund 2, which invests in infrastructure across the communications, transportation, logistics, and energy sectors, was earlier reported to be targeting $4 billion, which would make it larger than its $3.3 billion predecessor, Stonepeak Asia Infrastructure. P10's North American small buyout-focused private equity firm subsidiary, RCP Advisors, closed RCP Secondary Opportunity Fund 5 with $1.26 billion in capital commitments, marking an oversubscription. This was against the initial $1 billion target, which the support from investors, including high net worth individuals, pension funds, endowments, foundations, and insurance companies. Through secondary transactions, the fund seeks exposure to private equity funds that generally focus on leveraged buyout, growth, or restructuring transactions. Finally, Madrid-based real assets private credit specialist Incus Capital said it has reached the halfway mark of its planned £800 million fundraise for European Credit Fund 5, with support from new and existing investors. With a $1 billion hard cap, the fund will provide asset-based loans targeting exposure to infrastructure, real estate, and alternative assets. Finally, we have our Dakota Cocktail events coming up.
Very exciting.
Very exciting. So next week, we have San Francisco on October 14th. Then we have on the 28th, both Toronto and New York City. I think we're just going to have to try to make it out to both somehow.
Exactly.
I will personally be at the New York City one, so I'll be happy to see anybody there and make the introduction. Then we'll have Chicago on November 5th, and then we're back in Philly on November 20th. That should be a fun one, very close by to the office. If you are interested in attending any of these events, please register at dakota.com/cocktails. That's dakota.com/cocktails. We'd love to have you out.
And I'll be at the Philadelphia one. And thank you for joining us, Pat. And,
Absolutely. Thanks for having me.
Thank you for coming out. Any questions, please feel free to reach out to me. And go Phillies. We're down
Phillies.
2-0, but we're going to come back.
We're coming back.
Exactly. And
100%.
thank you. Yeah, exactly.
So are the birds. We're there. We're there.
Exactly. So thank you guys for coming out, and see you later this week.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediate database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.